The NEAR token, the token by the NEAR protocol, is at historical lows when measured in Bitcoin. Here, look at this. Doesn't this look like a nice buying opportunity potentially? Almost no downside, but upside of more than 1,000%. Now here's the problem. The current momentum still looks very ugly. We have seen chart patterns like this before, even in the NEAR protocol. This is NEAR measured in Ethereum. So NEAR's performance relative to Ethereum, not relative to Bitcoin, but only up to May of this year. And unfortunately, this support did not hold. And so who says that the support measured in Bitcoin will work in any way? The best is probably always to follow the current trend. If we're currently trending downwards, it's better to rather stay away. If we're currently trending upwards, it's better to jump on. The question though is, how do we measure when a trend flips? How do we decide to buy over here or to buy over here? A straightforward way is to use moving averages like this one here in turquoise. We would be buying whenever the price is above, and we would be rather staying away when the price is below. And so with this particular moving average, we would be waiting until NEAR makes another rally of at least 17%. But that seems arbitrary, right? Why do we take this moving average specifically? This, by the way, is the 100-day. Why don't we take, for example, the 50-day, which looks rather like this? Then all we needed was a rally of 12%. What's the best moving average to time these current trends? That's a question I regularly answer on this channel for all kinds of different cryptocurrencies, for Bitcoin, for Ethereum, now for the NEAR protocol. We're trying to find out, using backtests, using simulations of buying and selling, what's the best moving average historically for a particular asset. And then we assume that psychology over time doesn't change too massively and that what worked in the past is likely going to work in the future again. And so let's look at those technicals. Let's look at the backtest. The data starts in October of 2020, goes all the way to October of this year. So we've got 3 years of data, and then we simulate buying and selling the NEAR token depending on the duration of the moving average measured in days. And we are backtesting both the simple moving average and the exponential moving average. We also have some trading fees here, 0.2%. And we bet on rising prices whenever the price is above. So that's during times like this, we're betting on rising prices. But we also bet on falling prices, as in we go short whenever the price is below the moving average, making money in that process. And so let's look at what moving average historically worked the best. Here for the simple moving average, it seems to be the 39-day. And for the exponential one, it's the 22-day. So we can also look at this in chart form. On the x-axis, we've got the moving average duration. For comparison, buying and holding NEAR during the time period, which would have returned minus 50% annualized, so compounded every year. And here on the y-axis, we've got exactly that, right? The compounded return. 39 days works really well. That's for the SMA, and 22 days works really well for the EMA. Same as here, 39 and 22, with the SMA being better than the EMA. What I also find interesting about this chart is that pretty much all of the trading approaches, independent of duration, is better than buying and holding. If you simply don't go too short on the duration and you're always trading in and out, producing all of those fees. If your moving average duration isn't too short, then you tend to outperform, but there's an optimum: 39 SMA, 22 EMA. So let's plot that over time. This is on a linear scale how this would have performed. So in turquoise, the trading return, and in white, the NEAR price. Here the same chart, but on a logarithmic scale. So we're making money whenever the price goes down. We're betting here on falling prices. And here the same for the exponential moving average. Also a very nice outperformance. Again, pretty consistently, right? When you don't look at the price chart, you just look at the return generated through that trading. It's a very, very constant increase, right? Here on a logarithmic scale, we've got 10 x's from one another. This is how logarithmic scales work, right? Same here for the return of the simple moving average trading strategy. Very, very consistent profit generation. So let's look at this on the current chart. Let's look at how those two moving averages are now relative to NEAR and how much NEAR would have to rise in order to turn around that momentum. Because just the relative valuation to Bitcoin, which is currently at historical lows, might not be necessarily enough, right? We need to get this first spark of excitement to create a new trend. So let's have a look at that chart with the best moving averages. That's the near price, the best SMA in turquoise, the best EMA in red. 5% are needed to cross the EMA, 6.6% are needed to cross the SMA. So really, if history is any indication, we should be at least above $1.11 to turn bullish again. This is no perfect strategy, right? We do have our fake outs over here, for example, on the 1st of October. We would have bought high here just in order to then sell low again on the next day. Right? This backtest assumes simply just trading at the end of the day, UTC midnight. It doesn't trade within the day, so those intraday spikes don't really matter. We just look at the price once a day, and yeah, we do sometimes have failed signals, but that's why we make these backtests, right? That's why we want to find out what duration worked the best, because it's not necessarily intuitive without making that calculation. Well, it's a relatively active approach. Whenever a rally stops, we are exiting fairly fast. Whenever we are crashing, we are also changing our position quite quickly. Currently, despite the nice long-term, very low price measured in Bitcoin, I think it still makes sense to at least see a bit of a rally. $1.11 is the minimum target. Let me know what altcoin to check next. Simply join the Telegram and send me a message. Link for the Telegram is down below. Cheers!